Now we're going to turn to Ford's big announcement today about the huge amount of money the automaker's EV business has lost.
Ford says it lost $3 billion before taxes over the past 2 years.
According to a new financial reporting format recently disclosed, Ford's electric car company lost $2.1 billion in 2022 and has projected $3 billion in losses for 2023. Why is the auto titan struggling to break even? Let's see. It was the first time the manufacturer had separated its electric vehicle division from the rest of its operations in a financial report. Ford has been making investments in hybrid and electric cars, such as the Mustang Mach-E and an all-electric F-150 pickup truck. Last year, Ford said that it would increase its spending on electric cars to $50 billion by the year 2026. The findings demonstrate how Ford's heritage vehicles, such as gas-powered versions of the F-150, are seeing revenues negated by the expensive labor of developing the electric vehicle unit, known as the Ford Model e, Ford Blue, the company's gas-powered division, and Ford Pro. Its commercial and government fleet, respectively, produced $6.8 billion and $3.2 billion in adjusted income in 2022. By midday on Thursday, the company's stock price had increased by 1.5%, exceeding the general market. According to a news statement from Chief Financial Officer John Lawler, we've essentially founded Ford under the leadership of CEO Jim Farley, who believed the legacy gas-powered company was holding Ford back. The decision to divide the two divisions constituted a significant restructuring for Ford. Lawler stated, "It's not just about how we disclose financial outcomes. We are changing the way we think, decide, and operate the business in order to maximize returns on capital." Executives blamed the rising cost of investing in electric vehicle production for the electric vehicle division's losses, which increased to $2.1 billion from just $900 million the year before. As everyone knows, EV startups lose money while they invest in capability, develop knowledge, build sales volume, and gain market share, Lawler said, according to the Associated Press. The business previously disclosed plans to introduce 7 new electric vehicles in Europe by 2024, including battery-powered versions of well-known models like the Ford Puma and a 1-ton truck. Additionally, it is spending billions on factories in Michigan, Kentucky, and Tennessee that make batteries for electric vehicles. Lawler explained the losses as startup charges that will eventually put Ford in a better lucrative position during a media briefing on Thursday. According to a release issued by the company on Thursday, the Model E business is aiming for an 8% profit margin by late 2026, which will help the company as a whole achieve a 10% margin. Jim Farley, the CEO of Ford, stated that at least in the short term, the adoption of electric vehicles will be slower than anticipated. Recent statistics from Ford's second quarter showed a sizable loss in the company's electric vehicle sector. Ford revealed that its electric vehicle company lost $1.1 billion before interest and taxes in the second quarter, even though it recorded $45 billion in revenue, a 12% rise year-over-year. Ford is now anticipating a loss of $4.5 billion before interest and taxes on its electric vehicles in 2023. Previous predictions pegged the losses at about $3 billion. John Lawler, the CFO of Ford, made a statement regarding the pattern during a conference call. While there is little doubt that there is a shift toward electric vehicles, Lawler stated, the last few weeks have shown us that the adoption by early majority customers will be a little slower than expected. He also mentioned that Ford was somewhat slowing down the introduction of electric cars, with the company now anticipating producing 600,000 EVs annually by the end of 2024. The market for Ford's electric vehicles is still expanding in spite of the greater losses. According to a press release from the firm, sales of Ford Model E's first-generation electric vehicles increased 39% in the second quarter. The speed of EV adoption in the near future will be a little slower than anticipated, which will be advantageous for early adopters like Ford. While others are attempting to catch up, we have next-generation products that are completely new and are in advanced development that will astound people. EV customers are brand loyal, and we are winning many of them with our high-volume first-generation products. We are also making wise investments in capabilities and capacity around the world. The Ford Mustang Mach is anticipated to be produced in 270,000 units by 2023, according to the car manufacturer. The automaker intended to dramatically increase production at the Mexican plant in order to accomplish this. Ford, however, was forced to halt operations at the Mexican plant in January of last year in order to get ready for it. After Tesla dropped prices in January, Ford was forced to lower the price of the Ford Mach-E as well. After yet another price cut for Tesla's Model Y, the Blue Oval has recently reduced the price of the sub in order to keep it competitive. The Blue Oval announced last month that it anticipates a $3 billion operational deficit for the Ford Model E this year. However, the manufacturer is upbeat since it anticipates having positive operating profits in 2026. Ford expects the EBIT margin to be 8% and plans to continue mass-producing cars through the end of the year. In the interim, Ford's revenues are still being guaranteed by its gasoline-powered vehicles. Ford Blue reported first-quarter operating margin of 10.4% and net income before interest and taxes of $2.6 billion. Ford departed the Indian market in 2017, and General Motors did the same in 2016. Why do American automakers continue to fail in India? Ford and General Motors both once had excellent prospects in the Indian market, but they were unable to build on their early successes. When in India, do as the Indians do. Ford overlooked this and introduced cars that weren't entirely tailored for India. Contrary to the United States, India has a right-hand drive, but Ford kept installing switches in Indian cars in the same manner it did in American cars. Ford viewed India through an American prism. They were perplexed when the media inquired about their vehicle's fuel economy, because they were so focused on engine power. And I can attest to the quality and power of a Ford because I've driven one, but most Indians value fuel efficiency over power. The global vehicle lineups of Ford and GM initially lacked compact cars, but Maruti and Hyundai launched small cars and kept grabbing market share. Ford and GM overlooked the Indian market for small cars, which has historically been the sweet spot for manufacturers. Despite the losses, Ford stock is still a buy. While conventional gas-powered vehicles continue to be the company's primary source of profit, investors are understandably excited by the potential of Ford's EV business and worried about its slower rate of progress. These portions also keep doing well. With a consumer-centric internal combustion vehicle subsidiary called Ford Blue, the carmaker made an operational profit of $2.3 billion. The commercial division of the car industry leader Ford Pro also produced operating earnings of $2.4 billion. Both numbers exceeded Wall Street's projections and were up from the previous year. The gains were primarily due to the success of pickup trucks, sport utility vehicles, and commercial van sales. Ford sales increased by 12% year-over-year to $45 billion thanks to the strong results of Ford Blue and Pro. The cost of Ford's electric F-150 Lightning pickup trucks had already been drastically reduced. Some models will experience drops of up to $10,000. Following the EV's introduction in 2021, Ford had to apply repeated price increases for the F-150 Lightning due to supply constraints and rising commodity costs. Ford now claims that its supply chain bottlenecks are clearing, that the cost of important commodities like lithium is declining, and that its new production lines are starting to operate. Furthermore, many of these risks may already be factored into Ford's share price. Less than 5 times the anticipated adjusted operating profits for 2023, as well as less than 8 times the anticipated free cash flow, are being traded for the stock of the auto giant at the moment. That's surprisingly affordable for this age-old and still wildly successful automaker. That's all for now. So, what do you think about the solutions to the problems that Ford is facing? Comment below. For more videos like this, subscribe to our channel. Thanks for watching, and see you in the next video.